Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And today, no, this is not a clickbaity title, I promise. We're going to look at the steps that you can take to double your net worth because right now, what's happening in the stock market is a gift. It is a good thing, and we're going to look at what you can do to really take advantage of it.
All right. I look forward to hearing it. If you guys kind of enjoy this entertaining stock market content of two stupid guys trading stocks and talking all things personal finance, by all means, give us a like and subscribe below. We'd love to have you along this little venture of ours. With that, we'll get to it.
Two Stupid Guys Trade Stocks. All right. Who's the guy in the far right? Why is there a turtle on the screen?
Absolutely no idea who that is or what that is or how that relates to this. Maybe is that Warren Buffett's father? Maybe I don't know.
Yeah. So for those of you who watch these videos, a lot of times we'll each take a premise and make a video, but the other person doesn't know what's happening. So Vinny has no idea who this turtle is.
Nope.
That is Oogway from Kung Fu Panda. Fantastic movie. We'll say he's a little bit of a philosopher. He says, yesterday is history, tomorrow is a mystery, today is a gift. That's why they call it the present. Okay?
I've heard that before, actually.
Yeah, he didn't actually say it, to be clear.
Probably.
Yeah. It's
Confucius,
pretty sure
maybe.
it was said like 1,000 years ago at some point.
Yeah.
But the point is, the stuff that's happening in the market is actually a gift. And if you use Burry, looking at, hey, we don't have that much to drop yet. If you use Buffett, I'm sorry, we have more to drop. Sorry, we have not dropped enough. Said that backwards.
Yeah.
If you use Buffett of the buy the fear, sell the greed mentality, and then Mr. Oogway here, we actually have a very good opportunity. Now let's get into what I'm talking about.
I love it.
I'm going to get into why this is accurate. Everyone's freaking out. Oh, bear market. The reason why everyone's freaking out is because so many of us started investing as investing became more user-friendly, more available, i.e. Robinhood, Webull, all these firms that started within, let's say, 10 years. Okay? Mm-hmm. There's a large group of people that got onto the market. So this is really the first bear market asterisk with the 1 month following COVID. Okay?
Yeah, we've had a hell of a tailwind, so it's been a very different environment for the last few years.
Yes, exactly. Unless you are retiring within 3 years, there is no actual risk to your investments unless you're over leveraged or have short-term options. Okay?
See, the point I take with that, too, is that when you retire, you don't sell all your stocks immediately, right? You're going to be selling your stocks for the next 20 years. So
exactly.
Even the people that are about to retire, they really should still have faith and trust in the market.
Yeah, that's true. There's really no risk. The only risk is within 3 years, if you were going to withdraw, okay, you're in trouble. That's fair. But let's get into this. All right, let me move you. So, just some quick stats here. There's been 13 bull markets, okay, since 1932. If you add up all those numbers right here and all the way down up here, your average bull market lasts 5.15 years with an average gain of 178%. It's pretty good.
Yeah.
All right?
Yeah.
Now let's look at the bear side. The cool thing about this is the R is associated with recession. So not every bear run has a recession associated with it. But the average bear market lasts 13 months with a recovery, which is important, lasts an average of almost 2 years. Okay?
Wow.
In addition, 8 out of 11 bear markets were associated with recession. I put an asterisk on COVID here. This is the COVID recession because this recession was counted as 1 month. That's not really accurate. So little bit of an asterisk because the recovery was 5 months.
Bear market was 1 month.
Bear market was 1 month.
Yeah.
I don't really think we had a recession. We're having one now, but I don't know if
Good
we
chance.
had one between March and July like it's claiming.
Gotcha.
It was also a very unique situation, but the average loss is 34.2%. Okay? If you look these stats up yourself, depending on your start date, you may have more bear markets. For instance, the 13 bull markets was from 1932, so this is getting rid of other years. And then on top of that, some of the graphs I was looking at do not count this one because it was 19.9%, not 20. The reason why this is on this graph is because other indexes fell well below 20. So they just put it in. All right?
Interesting, yeah.
Right now, we are having a fairly low sentiment, we'll say, or low confidence in our stock market, okay? Now, the reason why I don't think this is the worst deal is because look how many times investor sentiment has been above 50%, meaning 50% think it's going to be bullish within 6 months, okay?
Yeah.
Once. 2018 to now, look at the stock market gains between 2018 and 2021. Yeah. How on earth was not everyone being like, oh my gosh, we're going to the moon? Because we did. The SPY went wild, like crazy. So I don't put a lot of weight on this investor sentiment thing. It seems like everyone's pessimistic at all times. So
yeah.
How do you feel about that?
Yeah, it's actually interesting. The chart that I've actually seen recently that was really kind of supports this is, I don't know if you look at the put-call ratio. It's another kind of indicator for market optimism versus pessimism. And, we're at a rather high level as far as the put-call ratio of late. I'm trying to see if I can find a good one on the fly here, but it's definitely a indicator that people are a little bit more pessimistic than optimistic, to say the least.
Yeah, if you want to pull it up, I can. I'll talk about this real quick.
Yeah, I can't find a good one. I tried.
No, okay. So here's our SPY. All right. Here's our peak. We actually did not hit 480. We hit 479.98. So we're going down. Our 20% drop, or when we would consider that we are in a bear market, is at this point about May 12th, right here. Okay. So this is still part of the bull run. So the bear run would technically start here. Now, the average, well, I'll get back to that. We're at about 2 months right now since this started. We have dropped about like 24% total at its lowest point. But if we remember, the average loss was 34 and the average length was 13 months. So we're really kind of in the beginning of this here.
Okay. Yeah, that seems reasonable.
Also, look how cute this is. This little jump up here on super low volume. Yeah, that's not anything. We'll talk about that later.
Yeah, I love it.
So this is a little bit of a risky trade. All right. But I am going to be taking this trade because I'm going to give myself a long enough expiration. So a SPY put strike at 360 with an expiration about a year from now, 11 months. Cost, that's not right. It's 2,360, not 23,000. My bad. It's definitely not the cost.
Dylan YOLOs against the SPY.
Yeah, that's not the cost. My bad. The goal is 322. So let me look right here. Where did I get 322? So we've looked at this before, right? Usually in bull markets, this will go up relatively slowly. It takes a long time. This is September 2020. Look how fast we've dropped in a matter of 6 months. We still have a lot to go. Burry will even say, we're not done. We're not even close. Most people will say we're not even close because we had such a bull run. Agreed?
Okay. Interesting. Why did you choose the SPY as opposed to triple Q? Out of curiosity there. The triple Q is the one that's more sensitive and more volatile right now.
Yeah, that's a good point. I could do Qs. I really just chose it because SPY is more known.
Okay.
And more representation as a whole of the stock market. And on top of that, the Qs have already dropped more than the SPY.
True. That is for sure. I was just kind of curious from a standpoint of a couple of other YouTube creators have talked about it. So Paul from Everything Money was originally short SPY to like start the year, and then roll that position to tax loss harvest, close that, and opened a short position on triple Qs, which I'm not sure if he still maintains or what at this point, but just because of like the kind of makeup of the companies make up the triple Qs. The other thing that was kind of interesting. So Jake Bro actually just released a video where he looked at the top 10 holdings basically of triple Q are all, your Google, Apple, Nvidia, Tesla, that sort of stuff, and looked at each one of them individually on like a price to sales multiple, and kind of showed where the stock would go, and how much each one individually could potentially bring down the triple Q index. Just for Apple, which makes up almost 13% of the triple Q, to get back to a historical price to sales multiple of about 4, it would have to go down to like $80, $90 a share, somewhere in that ballpark.
I don't know if we're going to see $80, $90 a share on Apple.
Yeah, I don't know. I hope not.
I don't think we'll break 100, to be honest. But
if we do,
the point is, you do not have to take this trade. This is a little bit of a risky trade. It's an option. If you do go to short, make sure you give yourself plenty of time. The key with this is you don't want to have time issues. But I would keep this trade going through October. Why October?
October is historically the worst month of the year for the stock market. That's when the major sell-offs happen.
Yeah. So
is that what your underlying thesis is? Okay.
Yeah, and there's no way we're hitting a low in summer. It's not a thing. All the smart money is still chilling on the sidelines. We're gonna have a pretty steep drop off. So, anyways, if you start accumulating during a bear market and you start buying shares, as long as you don't over leverage yourself, or you don't have to leverage yourself at all, the come up in the next 3 years can really, really, like I said, double net worth, as long as the net worth is all in the stock market, right? It's not going to do anything for your real estate, or it's just going to double your stock market holdings over time. So This is a pretty good opportunity.
I don't know if people have heard me tell this story before, but like I did some investing back in like 2008, 2009, or after the great financial crisis, Great Recession there. And one of the companies that Freeport McMoran, I bought them, I think it was like $28 a share back in like 2009. I sold at like 60, somewhere around there. So I doubled my money. It was a big position at the time. I think I made $11,000 or something like that on that position for myself. And then I watched the stock go all the way up to 120 a share.
Yeah.
So I could have quadrupled my money. But coming out of these really tough economic times is when you get these absolutely tremendous like pops and run ups. That's when you see those massive gains.
Yeah. This is definitely a time to be buying stocks slowly. Don't just be like, all right, I'm going to have $20,000 for stocks and buy all 20,000 right now. You want to watch the market, have buy points. We have a variety of videos showing what levels to buy. For instance, 320 on the SPY. I would actually buy a short-term call because it's going to bounce off of 320. The levels that we've been showing have been well respected almost every single time. So, yeah.
Nice. All right, guys. We'll catch you on the next one.
Catch you on the next one.